Today, we're going to talk about FOMO, or the fear of missing out. Through this discussion, I hope to give you guys a better understanding of what FOMO is, where it may come from, and how we can go about in managing it. FOMO is a powerful emotion that comes from within when a great opportunity is passing by us. And if there's anything I know about powerful emotions, it's that they can easily tempt us into irrational behavior, which, for your typical trader, will often lead to disaster. Think about the last time that the market crashed and ran away without you. Were you disappointed that you weren't able to participate in that trade? Did you feel a sense of urgency as you tried to chase in after it, only to be swept off of your feet? Well, don't worry. These are normal emotions for a trader to have, and something that we face on a daily basis. If you're answering no to this question, then I suggest you take a step back and reflect. Are you being honest with yourself? Whether we are a new or experienced trader, I feel like everyone can relate to this scenario in one way or another. But do not give up hope. There are ways for us to work around these emotions. Let's start by breaking down the essence of FOMO. At its core, it's an indulgence in the fantasy and an unrealistic take on reality. It's a belief that we are capable of achieving everything and that we are entitled to achieve everything. If we take that statement at face value, it's really stemming from our ego. Here is one way that may unravel. Let's say that the market is reversing and we have our FOMO trader here who has just missed that move. Well, first, they're going to start feeling a little bit of shame. They're going to tell themselves, hey, I'm a great trader, right? I'm the best trader, and so I shouldn't miss out on any moves. And yet here I am missing out on a really great sell-off. What is going on with me? They're going to breed some sort of uncertainty in their mind, as well as a little bit of anxiety. And then if the market continues to reverse, they will start to negotiate against themselves. They'll say, hey, okay, that's fine. I missed this move. That's okay. But I'm still a great trader, and I know that I make good decisions. And all while they are thinking this, their feelings start to get heavier and heavier, and they start to convince themselves, hey, I can still enter into this trade. My feelings are very strong. I feel like this is a really good trade. And if I remember back, I'm a great trader. And so whatever is going on in my mind should be correct. So I'm allowed to enter in late in this trade because, hey, I'm a good trader, right? I don't make mistakes. I can still enter and it's still going to go down because I know what's going to happen. As you can see here, the trader starts to really mix between their logic and their feelings to the point where logic is basically thrown out the window and feelings have complete control over what the trader is doing. Now, as an outsider, you may look at this series of events and think it's laughable. Like, how could someone ever go down this path? How could someone ever deal with this nonsense? But this is reality. This is what FOMO, or powerful emotions, will do to you. It will cloud your judgment and basically make it impossible for you to make any logical decisions. Another factor that may exacerbate these feelings is something called a scarcity mindset. That is the belief that events or resources in our life are limited. And so when these opportunities pass by, we feel this urge to participate in them because we have this understanding that they won't come back again. And they very well may be a rare occurrence, but that's where we have to go back to our whys. Why are we trading? Are we trading to hit a home run and then never trade again? Absolutely not. I feel like most of us traders are here to come back on a consistent basis, whether that be a daily, weekly, or monthly occurrence. So what does that tell us about the market? Well, for one, it means that deep down, we do believe that the market is going to come back tomorrow. We do believe that these setups will show themselves again, right? If we didn't think these setups would ever show themselves again, then why would we study and why would we try and backtest some of these strategies if we didn't think we'd ever see them again? That would be pointless. So deep down at its core, we have to think about, why are we trading? We are trading because we do believe that the market will repeat itself. We do believe that, yes, the market crashed once in the past, and we believe it will crash again. Or that breakout you missed, that breakout will happen again. Maybe not in the same fashion, but it will look very similar. So whenever we try to have this scarcity mindset, and whenever we have that inkling inside of us where we feel, oh man, I'm never going to see this a breakout again, go back to your whys, or even list them out and write them down. Why am I trading? I am trading to see setups on a consistent basis that I know should repeat themselves. And so I study now so that in the future, I will not miss out on them. We could even go as far as to say that there is no such thing as a one-time event in the market. Eventually, everything is going to repeat itself in some form or fashion. And maybe there have been one-time events, but I think their second occurrence has yet to happen. And so with that belief, we need to think, instead of, okay, I missed that trade, oh, I'm never going to see it again. We need to think to the future. We need to be more progress oriented. Okay, I missed that trade. That's okay, but I know it may happen again. And so I am going to work hard, study it, and make sure I don't miss it on the second opportunity. You could also be the dreamer. That's the person who's able to take a tiny bit of information and explode it into this wonderland of stories. You might see the market slowly start to sell off, and all of a sudden, these fantasies of, oh my God, I think the market is about to make this big crash. It's going to make this massive sell-off. And that's where our temptations start to mix with our greed, with our fantasy. All of it starts to mold in until we are no longer able to see reality. So again, it's similar to the ego where we kind of clouded our judgment, but this time it's more of a fantasy. We're able to see things that really aren't there. And then what happens is it overwhelms our mind. We click on the trade, we enter in, and then in an instant, we snap back to reality. Our money actually goes into the trade, it becomes real, and we lose all of those feelings. And we actually get to see what the market is for what it is. But by that time, it's too late. And typically the market already is starting to move against us. There are two solutions for these types of traders. First, if you're that strong, confident trader, you have to take a step back and tell yourself, hey, yes, I am a good trader, but I also have to accept the reality that I can't win every trade and I can't spot every trade. The market will surprise me, and I have to accept that. That is the reality of trading. No matter how good I get at this profession, I am always going to miss something. If you're the fantasy type, we have to bring you back down to the ground. We have to bring you back to reality, and you have to stop fantasizing about the market. You have to stop trying to create these stories in your head and actually take the market and see it for what it is. If the market is oversold, it's oversold. Don't think that, hey, the market has sold off 100 points. It's about to make this second big gap down of another 100 points. You know, it might happen 1 out of every 50 times, but most of the time, the market is going to do exactly what you have studied and seen what the market is going to do. So throw out that fantasy of it gapping down and trust what you have learned. Trust what you have studied so hard on to understand what the market is going to do. And that is where we'll transition to our next section, which is self-respect. As humans, we need to offer ourselves that respect and compassion. We need to take pride in our hard work, our accomplishments, and everything that we have achieved. If you've traded for at least 6 months, I know for a fact that there is at least 1 or 2 setups out there that you can say, hey, I have strong confidence in this trade. I know that there is a high chance of profitability. And I know that because I have seen this trade many times in the past. I have studied it and I am willing to put my money on it because I know that it should work. And yet, even with that knowledge, we still spoil it away on some quick hit or a dopamine rush, or when the energy starts to flow through us, we get that FOMO and we make some poor trading mistakes. And to me, that's a major disrespect to our trading plan and to ourselves. What was the point in studying or practicing those past 6 months or those past 2 years if we're just going to throw it away the moment our heart starts to beat? We really need to go back and practice some gratitude. Show care for yourself. Tell yourself that, hey, I have worked so hard to build this trading plan, and the least I could do to respect myself is to follow that plan. And remember too, we built this plan for success for our future self. We know that to be a great trader, we need to have a great trading plan. And so we worked hard to build this trading plan. Double down on that plan. Double down on that goal you had for yourself. And don't get lost in those quick hits that may feel good or may appease your emotions. That is not the plan's success that we are looking for. Okay, so concrete plan on moving forward. Well, let's first look at what we have already talked about. Number 1, we got to get rid of that scarcity mindset. Remember, the market is always going to come back. It's going to be here tomorrow, and it's going to repeat itself in some similar fashion. So if you ever get that sensation, that feeling, oh man, I missed this trade, it's never going to happen again. Why did I miss this opportunity? Slap yourself in the face and tell yourself, hey, this trade is going to happen again. And so I need to study hard so that I don't miss it on the second try. We need to remember the respect. Find that self-respect for yourself and remember all of the knowledge that you have worked so hard on. Keep it close to you. Take that accumulated knowledge, that trading strategy, and really just hug it close to yourself. Remember, the closer and the more consumed you are with that hard work you've done, the less room you have for those emotions to deceive you, for those emotions to come in and say, hey, Michael, you should take this other trade because it's going to lower your anxiety. No, the success is already there. You have built it and you have it deep within you. So practice gratitude for yourself. And then there are those emotions. We got to remember to keep our ego and also our fantasy in check. We need to always tell ourselves, hey, the market will surprise us. There are going to be moments in time where we simply were not prepared, and there is no way for us to be prepared. On the flip side, with those fantasies and those dreams, we need to remember to take the market at face value. The market is not playing tricks with us. There are no side motivations or, deceiving patterns that are happening. The market tells us what it wants to do. All we have to do is read it properly. And lastly, let's start adopting a trading journal. And in this trading journal, I want you to try something new, which is to start marking off your trades with a little bit of a sensation meter. Let's say on a scale of 1 to 5, when we enter a trade, we're going to add this little annotation that tells us what our emotions are feeling. So we might take this double top and we're feeling, wow, I think this could really sell off. So I'm going to put a 5 out of 5 because my emotions are telling me, hey, this is a great trade. We could also be taking some type of pullback, a pullback to the EMA, and we're a little unsure about it, so we might write a 2 or a 3. I want you to jot this down for every trade you actually take, and maybe even for the ones that you might consider. So what's this going to do for us? Well, either one or two things are going to happen. First of all, you could just have consistent numbers all the way through. You could have 5, 5, 5, 5, 5, 4, 4, 4, 5, 5. They could all be high numbers, or you could have all low numbers. You could have 1, 1, 1, 2, 2, 2, 1, 1, 1. And this is actually what we want to achieve. If our numbers and our emotions are pretty consistent, whether they are high or low, that actually means that we have removed emotions out of the equation, because either we are so high that we are always confident in the trades that we're taking, or they're so low that we don't really have a feeling towards them. We're almost robotic. We take the trade and then there's no sensation that kind of goes through us. So, you'd mark it as a 1 because you didn't really feel this high when you took the trade. And that's actually a good thing. That should be the end goal for us. The emotions really shouldn't factor into any of our trades or decide whether or not we trade them. In the second scenario, we could be all over the place. We could have a 5 here, a 4 there, and then maybe a couple of 1s. And this is where we can start really learning about ourselves. We can take this journal, and when we look back on it, we should notice one apparent thing. We should notice that the emotions or the sensation meters really do not correlate with the success of the trade. You could find a trade with a 5 out of 5 and it loses. And then you might see a trade that's a 1 out of 5 and that one actually wins. And what that should teach us, or should actually convince us, because we have the hard data in front of us, is that our emotions don't matter. You could feel the biggest sensation, the biggest high on a trade, and it won't affect what the market is going to do. It's not going to affect the success of that trade. Instead, what correlation we should find is that the trades that are in our trading plan, the ones that fit our criteria, the ones that pass all of those checklists that we have been looking for, those ones should work way more often than the ones that don't fit into our checklists. The ones that we probably took because we were emotional, we got a little FOMO, so we kind of skewed our criteria a bit to fit these trades in. Those ones we should see losing, and the ones in our trading plan are the ones we should see winning. Once we're able to convince ourselves, we're able to tell ourselves, hey, my trading plan is actually good. It's actually working the way that I wanted it to. And these emotions thing, they really don't mean anything. These emotions haven't really factored into my success at all. And so maybe I should stop relying on those emotions. That's going to wrap it up for this video. I hope you learned a thing or two about FOMO. And if you like this type of content, please let me know. Good luck out there, everyone. Happy trading.